All right, now debt fund, Indian fund-based corporate debt. Key concepts: negotiated dealing system, debt instruments, debenture trustees, offer document. Okay, learning objectives. To understand the debt market in India, concept of debt funding, governing the framework for debt securities, green debt securities, conceptual understanding on important technologies. All right. Regulatory framework: the Companies Act 2013 and the Company Share Capital and the Debenture Rules 2014. Issue of the issue of the Capital and Disclosure Requirements Regulation 2018. Issue and listing of the debt securities regulation 2008 and SHABI listing obligations and disclosure requirements regulation 2015 listing regulations. Okay, RBI guidelines. Now lesson outline is introduction, debt market, debentures, types of the debentures, governing framework for debt securities, then issue and listing of the debt securities regulation 2008, fundraising by issuance of debt securities by large entities, electronic book mechanisms for issuance of the securities on the private placement basis, indicative timeline schedule for various activities, green debt securities, lesson roundup. Okay, list of the further readings. Now we're going to go for introduction. Okay, now a vibrant capital market, both equity and bond, has to play an increasingly pivotal role to facilitate the fund mobilization for strengthening India's projected economic growth momentum. Debenture being an attractive source of the funding, the long-term debt instruments issued by corporates and government to secure fresh funds of the capital. Now coupons and interest rates are offered as compensation to the lender. Okay, coupons or interest rates are offered as compensation to the lender. The company issues the non-convertible debentures to attract lenders and investors. These come with a higher interest rates. The role of the corporate bond market becomes even more important now, given the stages of the banking sector. Keeping in view the larger complementary role that the corporate bonds have to play alongside a bank credit for financing economic activities and promoting ease of doing businesses in India, several policy measures have been taken by the government and the regulators to develop a vibrant corporate bond market. Some important measures include a framework for allowing the banks to provide partial credit enhancement for enhancing credit worthiness of the corporate bonds. Information repositories developed by exchanges and depositories provide consolidated information on the private consolidated information on primary issues and secondary trades in corporate bonds. Electronic book building mechanism for providing enhanced transparency in issuance of the debt securities on the private placement basis. Enhanced standards for credit rating agencies for timely monitoring of the credit quality of the bonds. Specifications related to the International Securities Identification Number (ISINs) for the debt securities to encourage liquidity and reduce fragmentation of the issues. Tri-party repo trading on the exchanges to enhance the liquidity and the price discovery in corporate bonds. Time taken for the listing of the public issue of the bonds are reduced from 12 days to 6 days. Now doing away with the requirements of the 1% of the security deposit for the public issue of debt securities. Now debt market are markets for the issuance, trading and settlement of various types and the features of the fixed income securities. Fixed income securities can be issued by any legal entity like central and the state governments, public bodies, statutory corporations, banks and the institutions and corporate bodies. The debt market in India comprises mainly of the two segments: the government securities market consisting of the central and the state government securitized zero coupon bonds and floating rate bonds, T-bills, treasury bills, and the corporate securities market consists of the FI bonds, PSU bonds, government corporate bonds. Government securities form the major part of the market in the terms of outstanding issues, market capitalization and the trading value. The trading of the government securities on the stock exchanges is currently through negotiated dealing systems using the members of the Bombay Stock Exchange and the National Stock Exchange, and these trades are required to be reported to the exchange. The bulk of the corporate bonds are being privately placed here, however not listed on the stock exchanges, and the trend is changing now. Most of the debt securities which are privately placed are now either listed on both the exchanges or one of the exchanges. The two depositories, National Securities Depository Limited and the Central Depository Services Limited, mainly records the holding of the securities and dematerialized from records of the holding of government securities of the wholesale dealers like banks, primary dealers and the other financial institutions are maintained by the RBI. Okay. Now negotiated NDS, negotiated dealing systems, is an electronic platform for facilitating the dealing in the government securities and money market instruments, and the NDS, that is a negotiated dealing systems, facilitates the electronic submission of the bids and the applications by the members of the primary issuance of the government securities by the RBI through the auctions and the flotations. It will provide an interface to the securities settlement system. Debentures is a document. Okay, now this we will record another section.